This video covers Sony's financial results for the second quarter of fiscal year 2025, from April to September 2025. Sony is a Japanese multinational conglomerate with operations in gaming, entertainment, and electronics, best known for its PlayStation gaming consoles. In addition, Sony completed the partial spin-off of its financial services business on October 1st. In the second quarter, from July to September, Sony's sales from continuing operations rose 5% year-on-year to 3,107.9 billion yen. Operating income increased 10%, marking a record high for a second quarter. Net income also grew 7% to 311.4 billion yen. Cumulative net income for the first half was 570 billion yen. The progress against the full-year forecast is 54.3%, indicating overall strong results. Operating income by segment shows that Game and Network Services declined, while Music and Imaging and Sensing Solutions delivered strong growth. Game and Network Services was dragged down by large one-time losses even though sales increased. Music performed well thanks to strong content and steady streaming growth, which lifted profits. Imaging and Sensing Solutions benefited from higher demand for image sensors in smartphones and cameras, leading to a solid profit increase. Game and Network Services segment focuses on video game development, console sales, and online network services. In the Game and Network Services segment, sales in the second rose 4% year-on-year, driven mainly by growth in network services and software sales. However, operating income fell 13%. The drop came from large non-recurring losses, such as the impairment related to Bungie, American video game developer, and the correction of previously capitalized development costs. Without these one-time losses, the segment would have shown profit growth. In this segment, Sony raised its sales forecast by 3%, mainly reflecting favorable foreign exchange rates. Despite the non-recurring losses and a tariff impact, the operating income forecast remains unchanged, supported by the positive effect of exchange rates. Music segment produces, distributes, and markets recorded music, music publishing, and related content. In the music segment, sales in the second rose 21% year-on-year, and operating income increased 28%, both reaching record highs for a second quarter. The strong performance was mainly driven by higher visual media and platform revenue, boosted by the hit theatrical release of Demon Slayer Kimetsu no Yaiba, Infinity Castle, and by growth in streaming revenue. Sony raised its full-year sales forecast by 6% and operating income forecast by 7%. Pictures segment engages in film and television production, distribution, and related media businesses. In the Pictures segment, sales in the second quarter fell 3% year-on-year, and operating income declined 25%. The decrease was mainly due to lower sales from theatrical releases, which had benefited from major hits like It Ends With Us in the same quarter last year. Higher sales at Crunchyroll streaming service partially offset the decline in operating income. Sony maintained its full-year forecasts for both sales and operating income. Entertainment, Technology and Services offers TVs, audio products, and other consumer electronics, as well as entertainment technologies. In the Electronics, Technology and Services segment, sales in the second quarter fell 7% year-on-year. The main reason was weaker demand for TVs and lower unit sales in displays. Operating income declined 13%. This drop came from lower sales and also the early effect of tariffs, although expense reductions helped partly offset the decline. Sony slightly raised its full-year sales forecast but lowered its operating income forecast by 11%, reflecting impact from tariffs starting this quarter. Imaging and Sensing Solutions develops and sells image sensors and camera modules for mobile devices and other applications. In the Imaging and Sensing Solutions segment, sales for the quarter rose 15% year-on-year, and operating income increased significantly 50%, both reaching record highs for the segment. Growth was driven by higher image sensor sales for mobile products and cameras, including higher unit prices, because larger sensors were used in new smartphone models. Sony raised its full-year sales forecast by 2% and operating income forecast by 11%, mainly reflecting favorable foreign exchange rates. Based on current market trends and customer demand forecasts, Sony has decided not to include any tariff impact in this segment's forecast. Based on the strong results, Sony raised its full-year forecast, expecting sales to rise 3% from the previous projection to 12 trillion yen. Operating income is forecast to rise 8%, and net income is also expected to rise 8% to 1,050 billion yen. The estimated impact of additional U.S. tariffs on operating income was reduced by 20 billion yen to 50 billion yen, and this change is reflected in each segment's forecast. Forecast revised upward, but annual net income is still down 8% from last year. Sony approved a plan to repurchase up to 35 million of its own shares, worth a maximum of 100 billion yen, between November 12, 2025 and May 14, 2026. This aims to improve capital efficiency, support strategic investments, and enhance shareholder returns. Sony announced that it will release the PlayStation 5 Digital Edition Japanese version, priced at 55,000 yen. This model can only be used with accounts set to Japanese as the system language and Japan as the country region. It is limited to the digital edition without a disk drive, and the console and cover feature a matte finish. The Japan-only restriction appears to be a measure against cheap resale of consoles purchased in Japan to overseas markets. Additionally, the price reduction is aimed at competing with strong sales of the Nintendo Switch 2. Stock price. This chart over the past year shows the stock price in Japanese yen at 4,669 as of November 13. This chart shows the stock price in US dollars at 29.44 as of November 13. Sony's stock price has been steadily rising, and it has risen after this earnings announcement. Current PBR is 3.63 and PER is 26.5. Dividend yield is 0.54%. Compared with the past few years, the stock looks expensive in terms of PBR, PER, and dividend yield. Conclusion. Music and Imaging and Sensing Solutions segments achieved record-high operating income during the quarter, showing strong business momentum. Based on these results, Sony raised its full-year sales and profit forecasts and approved a share repurchase plan to improve capital efficiency and enhance shareholder returns. Sony also completed the spin-off of Sony Financial Group, establishing a new organizational structure, and announced the Japan-only release of the PlayStation 5 Digital Edition, aiming to compete with the Nintendo Switch 2. This strong performance is expected to continue in the second half.